Welcome traders, Patrick Head Trader, Trading123.net. In this video, we're going to talk about our Trading123 Market Delta Indicator for trading the ES with NinjaTrader 7 or NinjaTrader 8. This chart is of NinjaTrader 8. And basically we have our volume print bar here that shows the high volume prints with the dark green colored prints here. So basically what happens on a trend reversal, you'll get a high volume print on the first green candle just after a low. So we have a high volume print come in over 400, and that's a reversal sign. It's all institutional volume prints moving the market. So the next candle, we get long 3 contracts, 28.59.50, and the market moves up on continued strong volume. And right at 10 o'clock, it gets another high volume print as it goes higher. Hits our first target. We lock in some profits. Now you can set the targets to whatever you want. Conservative trader would look for 4 to 6 ticks, and we're looking for a little more than that. So we hit our first target, hit the second target, and then I see the high volume sell print printing here. So I raise the stop, and it gets us out, and we lock in our gains, about 3 points on the trade, which is good on 3 contracts. So we got this high volume sell print, and this is all happening in real time. There's no delay here. This is not a non-lagging indicator. It moves with the market. You see this information happening in front of you. You react to it. Like I said, I adjusted our stop and we get out with some profits. And then we get short based on this high volume print. And basically we topped out here at the trend. So a high volume print followed by an uptrend is a sign of a reversal. So we're short 3 contracts again. Our goal is right around $600 minus commission. And it sells off pretty heavily, hits our target and keeps going. And we ended up with $598 in gains on this trade that started right around 10 o'clock and ended right around 10:10. Now on these high volume print trades, you're going to get in and it's going to move in your favor very quickly. And if it doesn't, the low of this wick right here is your stop. So you're risking very little to get into this trade, and the potential for gains as it moves up, you just adjust your stop, and same with the short. It made this high volume print. It's a trend change. You get short and you write it down. So let's look at one more trade. So here is the ES at the end of the day. And basically we had a sell-off, like I said. In the climax here, we got big sell prints, 900, 500. That's usually at the low. That is usually when the trend will change. It's followed by a high volume print, which equals a reversal. 1300 surge of volume come in here, followed by 280 institutional buying the lows. They're smart. They don't wait for an indicator to pop up and say, oh, it's a MACD crossover. No, this is institutional volume. So you follow the volume in trading. And here the market reversed and it goes up quickly here. A nice reversal. And you could pick up some some extra coin going into the close each day on these high volume reversal patterns. And the volume continues strong all the way up, and you just trail your stop until you see a big red volume print right here, and you take your profits, or this long wick is a sign that the top is in. So it basically broke out from the 28.68 area to 28.73. So anywhere from 2 to 5 point potential gains on this trade, and it's very minimal risk. And this is a non-lagging indicator. So if you did get long here, your stop would be right at the low here of this red candle, or just below the wick here. So you're not risking more than 4 to 6 ticks or so. So it's a very powerful indicator that nails the ES each day in crude oil very well on these high institutional volume prints. So people always ask me, they say, well, what do you do when there's no high volume prints? Well, you just sit and wait. You don't get in a trade based on a MACD cross or a stochastic cross. If you don't see a high volume print, you just sit and wait. You avoid the chop. And, you know, when the market is going sideways, all these prints will be like 50 and 60 and 70 or below 100. So you don't trade that. You wait for a high volume print, and then you execute, get in, manage your trade, and get out when you see a high volume sell print. That's how easy it is to trade with this indicator. And it's based on institutional buying and selling, and that's what moves the market. So I hope you enjoyed this video. Any questions? Email us. Subscribe to our YouTube channel here, and also like us on Facebook and follow our Twitter feeds daily where we post our trades. Good luck with your trading.